All right, so in this video, we're going to go ahead and talk about the fundamentals. One of the first things that everybody needs to know in trading is how to read candlesticks. So most people think about charts and they be like, "Oh man, it's so much stuff when they go here. I don't know how to read this. What am I looking at?" These things which you see here on this chart is called candlesticks. And what candlesticks do, they show you what's going on during a certain amount of time frame. So right here we have a 5 minute chart, and each one of these candlesticks show what has happened as far as price goes, whether price that went up or down during a 5 minute increment of time. Um, these increments can change. You can change them from 1 minute amount of time all the way on up to a full day, which shows you on a full day of time what has happened and what's going on. You can look at a weekly chart, a monthly chart. They have charts that go 25 years that you would have to actually pay for. Also, they got charts that go up to like 100 years. Um, so, but in this example, we're gonna go ahead and just speak about your 5 minute time frames. And I'm going to break down what the 5 minute time frame looks like when you go down to a smaller scale like the 1 minute, just so you can see the amount of action where price may have started at and where price might have ended at. So let's break it down. A candlestick shows you a duration of time. It has an opening and a close. It also has this thing called wicks. Wicks show you where price has been during that time frame. And the bar that's in between shows you where price has decided to stay at from open to close. Now, right here at the bottom, we're going to look at what we call a bullish candle. It's this green candle right here. For the example, it's green. Some people change the color of their candlesticks. As you can see, this candle right here next to it is a different color. It's only a different color because um, it's bearish. So you're either going to get a green candle or on a normal chart, you'll either get a green candle or a red candle. And the way that I like to trade with the blue candles because psychologically, I don't like the idea of panicking. So I ended up changing my candlestick to blue. Now, right here, the green candlestick, which is bearish, green means up and blue means down in this example. Right here, we have the opening of the bullish candle, right? This is the beginning of that 5 minute candle that started at 1:45 p.m. and then it closed at when it closed here, right here at the top, signifying that it's a bullish candle. If the close is above the opening price at that time frame, 9 times out of 10, well, 10 times out of 10, it is a bullish candle. Now you have these wicks here. These wicks just show where price has been at. Price might have went up and then came down a little bit because you had some sell pressure at the top, or price at the opening, like here in this example, we have the wick that came down here. When price opened, price probably came all the way down before going back up because you had a bunch of buyers at the bottom during that time frame. So what I'm going to do, I'm going to show you what this candle looks like on a 1 minute chart so that you can see exactly what's going on. Let's go ahead and do it. We're looking at 1:45. This is the start. 1, 2, 3, 4, 5. So as far as this candle goes, you see the opening price. Opening price is right here, right? And then you have this wick that comes all the way down here to the bottom here. All right. Then you have this wick that comes all the way right here to the top. And then you have the close of that 5-minute amount of time there. Now, mind you, like I said, the 5-minute candle that we were looking at was bullish, but it didn't start off as bullish. It started off as bearish first. But this is where price opened up at. Price opened up here. It went up, wicked, came back down in this area, and then came all the way down here to the bottom of this box here, and then pushed back up. And here at the top, you see that top wick, it ended up going up and then coming back down. So let's go back to the 5-minute and we'll see exactly, it's completely aligned. Boom. You got the opening here, you got the close here, you got the wick here, you got the wick there. So what I just showed you is basically everything that happened during that 5-minute time frame. And that's just basically like most people, when they're looking at charts, you're going to be in a position where you're going from either the 5-minute, the 15-minute, the 30-minute, the 1 hour. You're going to go back and forth through each increment of time to figure out where you want to enter at and where you want to close your where you want to close your profit at. Now, same example, but we're gonna do the same example, but we're gonna do it with this bearish candle. Now, like I said, we're on the 5-minute chart. I'm gonna line them all up. And the only difference between the bullish and the bearish candle is where price opens and closes at. So y'all see I'm aligning everything right now, right? But like I said, the only difference is the opening and the closing. Price opened here at the top of this candle right here at the top of the bar. And then price ended up closing down right here at the bottom of the bar. But mind you, we still have wicks. These wicks show you where price has gone to or during that time frame. So let's go ahead and look deeper into it. Go back to the 5-minute real fast. What time frame was this? This is 150. We're looking for 150 down here at the bottom of the chart. We're going to align it. Boom. This is the first candle during that time frame. So we're going to go ahead and count 5 candles out from here. 1, 2, 3, 4, 5. Here's the closing of that bearish candle. Now, here go the low of that candle, where it wick to. Here goes the close. Let me move this on this side so we know. And then the opening is right there. Let me bring this closer so we can zoom in. And then you have the wick here at the top. Right? Now, from 150, price has started here, went up, then it came down because of selling pressure. Came all the way down here. It got in, some buyers came in and pushed price back up. So we got that wick candle, but we ended up closing during that time frame here. Now let's go ahead and go back to the 5-minute, and we're going to see exactly that it all aligns. Here got a close, here got an opening of that 5-minute candle at the top of the wick, the low of that candle. So like I said, price is either going to go up and down during that time frame. And actually, for as an example, the market's open right now, so we can see just looking at this candle right here what price is doing. Right now, it's a bullish candle. It hasn't closed yet. We have 10 seconds left on this candle, and we're going to figure out where price is going to go from here. Let's just watch it. Here go the opening of the candle right here. Matter of fact, I'm going to bring this over. We're going to watch this candle as an example for the next 5 minutes. So you see it's wicking, it's going up and down, right? It's trying to figure out where it's going to go next. You have your wick right here at the bottom. And you have a wick right there at the top. Oh, sorry. And as you see, price is moving up and down. Now, most people think price is just moving sporadically, and it's not. It never really does that until either like a news thing is going on, or it's just a whole bunch of people in the market all at that same time choosing that one direction. Um, but most of the time, you're watching these candles, um, and you're watching how they set up so that you can figure out where you want to go to enter in and figure out what direction you want to go to make your money. So market only does three things. It goes up, down, or sideways. Most of the time, the best thing that you can do is just be patient. Because right here, we're still in the same 5 minutes of time. At first, when this candle opened up, it went up a little bit and then it came down and then we started seeing it push up. But for some reason, you have sellers coming in and they're like, yo, no, we're going to go ahead and sell. We want to sell. Matter of fact, let's go to what's the 1 minute chart. Yep, there go to open. Now, I'm going to put the wicks to the side for the moment. But I'm going to leave this wick here because price hasn't passed this wick yet. But we're 1, 2, 3 minutes in now into this 5 minute candle that we was just previously looking at. And you can see price started going up. It came down a little bit. It came down, went back up, came down. The next minute it started going down. The next minute it started going down. Came down here. We had some buyers down here put price back up. Now we're in the next candle. This is the 3rd minute in that 5 minute increment of time. And we seen price come down here. And now it's pushing up. So we have 1, 2, 3. This is 4. We have what? Almost 2 minutes left. 1 minute and 20 seconds. And we'll see what that 5 minute candle has done and basically where it closes at. Now, if it closes above this wick right here, we're pretty much bullish. And to be honest, if it closes above this opening price right here, we're still bullish. Now, notice this candle opened down here. Sometimes price doesn't open up at the same price that it closed at previously. And you're going to see that a lot as you go along in your trading career. Personally, I kind of use those areas as indication where price can go. It's kind of like the thing that most people do. We call it a gap, but I'll talk about that in another video. So but for now, we have one more second in this candle, and boom, 1, 2, 3, 4, 5. Now price closed here. This is where price closed at. We also have, here we go. There goes the candle. There goes that 5-minute candle right here that we were just looking at. It ended up what? Ended up being bullish. I mean bearish. You have the opening candle here. You have the opening candle here. We have the wick here. Well, price went up to, but then it ended up coming down. We see price closed here, and we see price wick down here. Boom. Now you see. Now it's the same thing that's going on over here with every single candle, right? And now, like I said, every candle has a certain amount of increments of time, right? If I were to go to a higher candle, like the 15-minute candle, this is what it looks like. It looks like we're still going up, right? But all that action, we would have 5 minutes worth of time in that 15-minute candle. This 15-minute candle started at 2:15. Let's go ahead and look at it. 2:15 started here. This is the opening down here. Let me move this stuff around. Like, I just want everything to be clear for everybody. So I'm just kind of like doubling down because I know it's confusing when you look at these charts. It was confusing to me. Like, I didn't know what I was doing. I didn't know what I was looking at when I first got into trading. Like, I got into Forex years ago, and nobody ever broke down what a candlestick was. I was just in there like, oh, I know it's going up. I know it's going down, but how to really look at them, nobody, nobody, nobody said anything. So I'm going to put these to the side, the close and the top wick. We already have the bottom wick of that 15-minute candle right here. And the reason why I'm putting those to the side is because the 15-minute candle hasn't fully closed yet. And it's also closing above this candle here and this candle here. So we have the first 5 minutes of the 15-minute candle, which started at 2:15. The next one at 2:20, and this will be the closing candle for that 15 minutes worth of time. And then we'll be in 2:30 right after that. So 5, 10, 15, this is the action right here. These 3 candles right here is the action of this one big giant 15-minute candle. I'm gonna move this over here too so you see what I'm talking about. We have the opening price here. We have wick where price came down to, the lower wick, or they call it the low of that increment of time, and then we're all the way up here, but price hasn't closed yet. We have 50 seconds left of this candle here, and then we'll see what it'll look like when it opens into the 2:30. But what I'm trying to show you all is just price action. Do Got 8 seconds left before it closes. Boom, there you go. That's the opening for the 2:30. This is the full 15 minutes between 2:15 and 2:30. Now the 2:30 candle is opened, and now we can see where that 15-minute candle closed at. Closed here. We have the top wick. Sorry, y'all. Gotta move all this stuff around for the example. So this is the close. This is the top wick. Boom. So we have opening price down here for that 15 minutes. So 5, 10, 15, it closed here. This is what price went to and wick from and came back down to close here at 2:30. Now we have the opening here at 2:30, and there's a next cycle of time coming. So basically what I'm basically showing you all is, hey, every time frame has a certain amount of action going on into it, and if you go up here at the top and you go through each, you're gonna basically be doing this while you're trading. You're going to go from the higher time frames, right? And then you're gonna go down. Hey, we're on a weekly. What's going on the weekly? Is price going to break above this wick, below this wick, below this close or this or the open? All right, what's going on there? All right, boom, nothing's going on. It's still in the middle. All right, let's go to the daily. What's going on the daily? All right, it's doing this on the daily. All right, so Monday, yeah, we popped above this candle from last week Friday. It looks like it's bearish. All right, cool. Let's go down to the 4 hour. What's going on the 4 hour? Okay, cool. Oh, there goes some type of what they call resistance right here in this area. All right, what happened? How did price react today in these last 4 hours based off of what we see over here on the left? Boom. All right, this candle came up. There go a wick. That means there was some type of resistance right there. There was a bunch of orders right there. Boom. All right, price came down. Boom, closed down here. All right. All right, well, the next 4 hours it came down some more, but down there was a wick down here. All right, it shot up. We have a stronger looking candle right here. All right, let's go to the hourly. Let's see what happened each hour. Oh, okay, here we go. Now we can really see a little deeper. All right, these are all hourly. All right, we got 1, 2, 3 candles pushing up each hour. All right, it's possible that the candles might keep going up past what we see over here, where price reacted at right here on this bearish candle. Price came up, reacted to this area over here. We have a lot of candles that's all in here moving sideways. All right, pushed the price down, but price came down here, got a bunch of orders going, bullish. All right, cool. It turned around. All right, simple. All right, let's go a little deeper because I want to figure out if I can enter somewhere. Where can I enter? Or is there other areas to my left that, price might go to and react from? All right, let's keep going. I don't really see much. All right, boom. Let's go to the 15-minute. Oh, all right. What you're basically going to be doing while you're trading, you're going to keep going to the left, to the left. You're going to see what's going on, where price is at right now at the very moment, and then compare it to what's going on previously. All right, boom. This was a couple days ago. All right, this is all that consolidation. This is that sideways action that we seen over here on the 4 hour. All right, there go that 4 hour. There go that 1 hour. All right, let's go to the 15-minute. Boom. Now, when we zoom all the way out and we go to the left, we see where it could be at. Like where and why price might have pushed down. And if we keep going down deeper and deeper and deeper, we can find levels of reaction all throughout this, where price might need to cross before we get a major move up, or where price might end up coming down to and retesting to see if we're gonna continue all the way on down. So, you just want to keep this in mind. You want to keep in mind that you're going to be going back and forth from these higher time frames all the way down to these smaller time frames. And I know I'm moving the screen quickly, but I'm like I was saying in all the examples, every time frame has a certain amount of action going on within it. You need to figure out what's going on within that time frame and know that the lower the time frame, you're most likely going to enter on a lower time frame. The higher the time frame is basically telling you the direction of the market. It's telling you where it's going to go. It's the trend. This is how you find your trend. So in the next video, I'm going to go a little deeper into trend following, figuring out, all right, this is how we figure it out.